Hi, friends. Welcome to a new episode in the Beginner Technical Analysis playlist. Today, we're going to learn one of the most important, foundational, and at the same time, ultra professional concepts. Something that, if you don't understand it, all your analysis can end up being wrong. And that's nothing but market structure. If you think that just because you know support and resistance, you're already good at technical analysis and there's nothing more to learn, then this video is made just for you. Because starting today, we're stepping into the real world of price action. Market structure means the sequence of price movements within a trend. In simple words, it means looking at how price moves up and down, which points it breaks, and from where it reverses. In general, we have two types of trends. First trend, bullish trend, uptrend. In an uptrend, we expect to see higher highs, HH, and higher lows, HL. For example, this is a high, this is a low, then a higher high, then a higher low, again a higher high, and a higher low. And this pattern continues. That's a bullish trend. Second trend, bearish trend, downtrend. In a bearish trend, it's the opposite. We expect to see lower highs, LH, and lower lows, LL. Like this. This is a low, then a lower high, then a lower low, lower high, lower low. And it keeps going. This is a bearish trend. Now, sometimes in the market, we see that this trend suddenly changes direction. For example, here we were in an uptrend making higher highs and higher lows. But then from this point, the price started to fall and we entered a downtrend, just like the bearish example I just showed. So how can we detect that the trend is changing and prepare to open a position? Remember, we have two trends, bullish and bearish, and each one has its own signs of a trend reversal. Let's start with a bullish trend. We're making higher highs and higher lows. Then suddenly we see a lower high. Do we open a position here? No. This is just the first sign that the trend might be changing. Then we wait to see if the price also makes a lower low. If yes, again, do we enter? Still no. We now wait for another lower high, and only when price breaks below the previous lower low, we can enter a short position. This is because a lower high followed by a lower low, and breaking that low equals confirmation that the uptrend has turned into a downtrend. Now we can be part of that new trend. Let's flip the situation. Again, in a bullish trend, price is making higher highs and higher lows. Then suddenly we get a lower low first warning. Now we wait for a lower high, and finally when the price breaks the previous low, we enter a short. So don't confuse these two setups. If in an uptrend you get a lower high, wait for a lower low, then another lower high, and then the break of the low. Only then open the short. If in an uptrend you first get a lower low, wait for a lower high, and then break the low, same idea. Now let's reverse it. Trend change in a bearish trend. We're in a downtrend making lower highs and lower lows. Suddenly we get a higher low. Do we buy now? We wait for a higher high, then a higher low, and only when the price breaks the previous high and holds above it, that's when we open a long position. Same goes if we first get a higher high, then we wait for a higher low, and again, break above the high equals confirmed reversal, and we enter. So that's how trend reversals work in both directions. Now let's move on to the next section. Let me explain why I always tell you that confirmation is important before opening a position. Let's say we're in a downtrend and we're making lower highs and lower lows. Now suddenly the market makes a higher high. Some people rush in and open a long position right here, but that's a mistake. Why? Because price can easily come back down, make another lower low, and continue the downtrend. So just because you saw a higher high doesn't mean the trend has reversed. What should we do instead? We wait for a higher low to form, then a break above that higher high with confirmation. That's the point where we look to enter. Now, same thing in an uptrend. We're making higher highs and higher lows. Suddenly, we see a lower high. Then price drops fast and the wick shadow of a candle breaks the last low. So what do some people do? They jump in and open a short. But again, this is a common mistake because a wick only shows that price went there, not that it held below that level. It's not enough. What we really need is a full candle body to close below the level. Only then we have real confirmation, not just noise. Same thing on the other side. If you're waiting for a breakout above a high and only a wick goes above it, that's not a valid breakout. Wait for the candle body to close above the level. That's what I mean when I say, wait for confirmation. The breakout must be clean with a candle body close, not just a spike. This prevents fakeouts and helps you avoid unnecessary losses. Guys, sometimes we see breakouts above support or resistance, or above a recent high or low. But instead of continuing the trend, price does the exact opposite. Let me show you an example. Here we're in a clear downtrend, making lower highs and lower lows. Suddenly, the price makes a higher high. This is exactly where I always tell you not to open a long position yet. We must wait for confirmation for that high to actually break and hold. But if someone FOMOs here, if they're afraid to miss out and enter early, they'll likely get trapped. They'll think the trend has changed just because of a single higher high. But what happened next? The market dropped again, made a lower low, and continued the downtrend. This is the kind of situation I'm talking about. A fake breakout, or what we call a fake out. These fake outs usually happen in high emotion markets when big players, the whales, want to trap retail traders and take their money. Don't overthink it. Just understand that this part of the market was driven by emotion and manipulation. There was a spike in volume, the green candle attracted buyers, but then a huge red candle followed. Why? Because those wealthy players entered with massive short positions. They want others to buy so they can sell to them and profit from their losses. These aren't random people. They're millionaires with deep pockets who can move the market. So yes, sometimes what I teach you won't work 100% of the time. If it did, then anyone could just watch a 15-minute video and become a millionaire trader. It's not that simple. Don't expect everything I say to be a guaranteed win. You need to combine what I teach you here with everything else I've taught and everything I will teach. You have to build your own strategy, backtest it, and see if it actually works. That's the most important thing. Practice. Test it before you trust it. Don't think you'll become a trader in 2 months. Let me be real with you. If you haven't been trading for at least 2 years, you're still a student, and that's totally fine. What matters is staying consistent, not giving up, and not falling for FOMO or for dream sellers who claim you'll get rich overnight with 2 chart patterns and 1 magical indicator. Trading is not gambling. If you think it's gambling, then don't even start. Go do something else. Heck, go rob a bank. Okay, maybe that's not moral either, but trading is not gambling. It doesn't make you rich overnight. If it did, everyone would be trading and everyone would succeed. But the reality is, out of every 100 people, only 1 actually makes it. And I hope that 1 person is you. So stay strong. I've got your back. Everything I know, every tool I use to make profits, I'll teach you. Together, we'll grow and hopefully we'll help this trading community become smarter and more honest. And we'll protect people from the fake gurus, the dream sellers, and the scammy packages that ruin people's lives and take their money. That's all for this video. If you enjoyed it, don't forget to like the video, subscribe to the channel, and hit the notification bell so you never miss an update. You can also follow all our socials. The links are in the bio, but I'm not here to give you empty hype. If you want to, great. If not, that's fine too. All that matters is that you survive in this journey. I truly hope that you'll be that 1 person out of 100 who makes it. Till the next lesson and the next analysis, take care, and goodbye.